Hey, good afternoon, everybody. Welcome to 12-Minute Trading. Today is Monday, the 26th of August in 2024. Chewing right through this month, and we've gotten through some pretty big risk events to this point of the month, and so far, we've been doing pretty well. There's actually been a V-bottom that we've seen since the beginning of August. We dropped down, bounced up like crazy. Actually, the bounce has been stronger than the sell-off to get us there in the first place, which does tell you something about that. So right now we're sort of walking sideways in the market. Today's a little bit of a, we're
Mixed.
down 19 handles right now today in the S&P, but it's like we may recover by the end of the day. We're just sort of walking sideways, and we'll show you on the charts later why we expect something like this. And also we're anticipating a couple of big risk events coming up this week, which Dave will tell you about. How you doing, Dave?
Hey guys. Last week we were here, and what did we say? We said that because of the V bottom rally and the daily energies being exhausted, we wouldn't be surprised to see sideways action to some pullback, get that daily energy charge back up, get that weekly energy charge back up with it, and then off to the races once we get into September. And it's really shaping up that way. We're flagging high and tight in the charts. We'll get to that here in a minute. That is a telltale bull sign. We could probe even a lot lower from here, and that would still be very bullish. We've got NVIDIA earnings this week. A lot of things ride on it. NASDAQ selling off today. Some of that could be, part of it's just charging up the energy. Part of it could be, some profit taking ahead of NVIDIA, right? Because we're just, they've been nailing it. They've been hitting it and everything else. And they're probably going to hit this quarter too, but the question is not this quarter. That's already priced in. The question becomes, what does it look like for the future? The Blackwell chip delay, is that an issue? What's guidance going to be? Are things going to slow down for them after, they've been, and is the stock worth what it is? If they're going to maybe not have as much demand since they've, doubled like every quarter. Like that's kind of what we're seeing here in the markets. I think tomorrow we could reverse, right? We've seen that. We saw it Thursday, right? The NASDAQ dropped 200 plus points and turned right around, and went up 200 plus points for an inside day on Friday, right? And now we're seeing typically what you see after an inside day, a little bit of a drop, right? But still hanging in a very small range for the NASDAQ, at least. S&P too. The Russell took off on Friday, right? That was, it was a little surprising as far as it went, right? But we've seen these moves from the Russell before. It's about out of energy, right? So we've got, and that happens because lower rates are good for all those Russell stocks because a lot of them survive only by debt, right? And so we had that nice move Friday, and today, we're kind of, walking sideways because we're almost getting, to exhaustive energy in that thing. And the Dow's kind of right there along there with it too. The Dow's kind of in the same place. It's interesting to see the dichotomy in the markets. Like the SPX and the NDX go together. The Dow and the Russell seem to be going together. It's like two different market cycles happening at once, if you notice.
The Dow actually printed an all-time new high today.
Yeah, it did.
So
but look how exhausted its energy is,
Yeah.
So that's the big thing is I think it's kind of hit its kind of high, and we'll probably see some pullback by the end of the week or so in the Dow. The only other thing is Friday is PCE. I don't know if PCE matters that much anymore. The Fed's already come out and pivoted. They've made the decision. I've started
to wonder that, just because, I mean, if you go back to 2 years ago, every little tiny report that we had never paid any attention to for the last 15 years, all of a sudden took on these over magnified, intentions for, when was the last time we'd never followed PCE before? At least I had never had. Jobless claims, nobody cared about that. JOLTS, nobody knew even what it stood for, anything like that. Right. So all of a sudden, all of these, the PPI, CPI, all of these took on huge importance over the past 2 years. And I think the market's sort of fatigued with it. And when you get to the point of actual action, then everything behind that, no, we don't care about that anymore.
Yeah.
Fed's on it.
And it's on Friday, which we know most people, long weekend, probably have already left for Friday. So I think a lot of the trading will be, done Thursday after NVIDIA and stuff, and then it'll kind of do its thing. It'll be a low volume day on Friday, but
or
I
will it?
still stand by
Or will it?
Why's that?
Will it be a low volume day because we don't need humans anymore, right?
We were talking about this beforehand. I heard it or read it somewhere, and I probably don't have the number right, but I know it's large. Something like 200 billion in plus at JP Morgan is now solely traded by AI with no human intervention. So just putting that out there. You and I have talked about how there is this point where we may see markets go to 24/7, 365 trading, and AI doesn't sleep. And so what a brave new world that'll be if we get to that point where we actually start to see that come to fruition. I think at that point, trading strategies for individual traders are going to have to really change because you can't sleep, or you got to have AI doing it for you. That's the only way. So there's only certain strategies, I think. Like, I think the wheel strategy still does well in that because you're protected, right? Something happens overnight, it's no big deal. But there's other strategies that really would be tough to trade. You'd have to trade in the normal day hours and be out. You have to do zero DTE.
Well, I think everything will be moving towards delta neutral of some type. Now, if you think about it, just about everything that we do is some form of delta neutral. So when you're like a vertical spread would be, you're like a put credit spread is your long deltas on the short put, and then your short deltas on the long put. So in a way, it's somewhat hedged against each other. Mm-hmm. So just about everything that we do, even a directional spread. So like the campaign diagonals that we do, those are delta neutral in a way to a degree, right? So there's always a little bit of a shift to them, but you can walk away from something like that. Mm-hmm. And crypto has already proved that you can support a 24/7 market. You don't need guys there with the hand signals and, it makes it easier. Really, the only thing for the pit is it makes it easier for big, enormous institutions to move huge amounts of contracts and assets. It makes it easier because you have that smart individual that knows how to game the system and work the system to their customers' favor. But really, with transparency, it doesn't matter that much anymore. Now you can, instead of waiting during a 6.5 hour period, you can do it over 24 hours. You don't have to worry about moving the market on yourself.
Right. I'll tell you what, let's jump into the charts and just do a rundown for everybody. And then I know we've got, we've got people on already putting in some comments, which is great. We'll get into all that stuff and we'll talk about this. So, like I said, kind of what we saw shaping up is happening. We've got a Dow that's exhausted. We've got a rut that's getting into exhaustion. So it really becomes now it'll be interesting to watch kind of how we're seeing the Dow and the rut up and the NASDAQ and the SPX down. I think we're going to shift and see the SPX and the NASDAQ up in the coming weeks, and the Dow and the rut come back down. So
we could.
Doc?
We talked about rotation about a month ago, and we certainly did get some rotation for at least a while until everything sold off. Mm-hmm. But looking at the S&P, we spend most of our time in the S&P just because it's the best indicator, even though financial media loves to follow the Dow, but none of us really do. This is what we call a high and tight consolidation, and it's extremely compressed. And what you're going to see from this is we're going to see this daily energy shoot higher. Think of this as a fuel gauge in your car. So this is like full, and down here is empty. And especially when we get here's the emergency line. This is where your fuel gauge is like blinking at you. Stop, pull over now. You're about to run out of gas, right? So typically when we see this, we see super exhaustion down here, and we oftentimes will see a rebound in the opposite direction or consolidation from that. So after this big move, now we're expecting the same thing. We're expecting a little bit of consolidation. The weekly chart, look at this. It just doesn't care, right? Mm-hmm. It went down, it went back up again. It's saying, well, I don't know what to think right now. And the monthly chart's saying, thank you very much. I appreciate the pause that refreshes. Right. So it's, everything is working at the way that we expected it to. So there's two things here, guys. Either we're going to see this thing walk sideways into Wednesday and or Friday, depending on whether, well, I guess it's Thursday and then Friday, right? So NVIDIA and then PCE are the two risk events this week. So from there, we could see this actually let's say NVIDIA drops a bomb. All right, we run down to 5,500, and actually what that will do is just encourage people to buy the dip. I don't think that's going to cause a crash or anything like that. I think this will momentarily shake up the market. And there was a study that I saw recently that all the bearish engulfing signals that are out there that have been since like 1994, generally they have been bullish. So bearish engulfing signals, normally they're bearish, you might imagine, right? These have been turned on its head. So over the past 30 years, these have been a bullish signal. So we're still anticipating higher prices. And then we get into fourth quarter, all bets are off, guys.
Yeah, the easiest way to charge up these daily charts right now is just another little bit lower to put in that higher low. And then, and we talked about this. I think we run in the beginning of September, maybe even to new highs. It's not that far on the S&P till the Fed. And then after the Fed cuts, that's when I think things get dicey. I think the back half of September into October, especially with an election coming up, starts to get volatile. I think there's going to be a lot of horse trading, a lot of things done ahead of the election. People want to go to cash, things like that, and then they'll trade afterwards. Once the election's over, you'll get certainty. And then markets will rally again from wherever they are. And 2025 is when, once we get into the end of December into 2025, think 2021, go back and study that chart in December into January of 2021. Just study that chart because that's what you're watching for. Because I just think that by that time, and let's make no mistake, the underlying macros are deteriorating and continue to deteriorate. Japan is not gone yet, guys. That is still lurking out there. It's still an issue. I don't know if you also saw oil jump pretty big today because Libya is going offline. So oil prices are getting jacked up. I mean, there's a lot of things that are happening out there, right, that still need to be accounted for that, the market is not paying attention to. It will. So I think we've got this kind of short time of euphoria that we're going to get into. And then from there, look out. So
I got a question here from Brewhead about on your fractal energy chart, have you noticed any indications that will either reverse at the bottom red line, right? So, and what we've actually had were the extreme levels here, the extreme readings on this are actually from the uptrends that we've had from a consolidation. So we had a consolidation, we had some big energy back here, and then it spent all of that and then some. So normally I don't see many trends whatsoever getting below 25 on the, but we had this is where we get too many people, too bearish in the midst of an uptrend. So again, this is why we stay with multiple time frames, because multiple time frames prevents us from getting too bearish as the price just does a normal pullback. It's the old analogy of you are walking a dog. So you're going from point A to point B. You're walking a dog on the leash, and then the dog is going to go all over the damn place, right, within the radius of your leash. But at the end of the day, it's going to show up at the same place as where, as you are. It's going to arrive at the same location. So we can see these moves up and around, but on the weekly chart, it's all the same swing. So this is why a lot of people lose track of that stuff, and we stay grounded with the larger time frames. So, okay. So back to your question, either reverse at the bottom red line or shoot below as it did in May. Well, I don't know. I mean, I never know what's going to happen in the future. The longer I do this, the more I throw up my hands and I say, I don't know what's going to happen tomorrow. So when we get a move down to 25, this is where I normally will get aggressive and step in front of that. Now, I did this, a week ago? Yeah, it was a week ago. I got to this level. We were at 25, and I said, hey, let's do a 5 DTE iron condor. And what happened? The same day that I entered, within the next 6 hours, it had just about run that trade over. And so, again, what we're doing is we're using the probabilities. If the probabilities were that we wouldn't get another move like that, but we did. And markets can just do what they want to do. And this is why at the end of the day, we have to watch what the price is doing. So the great thing about that trade, though, is that when we set it up, we set ourselves up with a condition that we weren't going to lose more than what we were seeking to make on that trade. And so we were able to get out for slightly better than break even for it. And, most of the time we're going to see the price stay within there. What we're not seeing right now is we have not seen a return to normalcy. So normalcy is the way that I say, like when we see historical or realized volatility is still much, much higher than the implied. The implied is in the blue. So we got a big spike in implied volatility back here, but the realized volatility is not gone anywhere. And so right now you're not being overly well paid for selling premium. And you have to be very careful about that because you can very quickly get run over. So in the next couple of days, I think either we're going to just continue going sideways. I think if we try to break higher, it's not going to make it. It's going to get faded. It's going to get sucked right back down again. On the other hand, this actually might be the most bullish thing to happen. If we drop down, if we fill that gap somewhere around in that area, probably will explode higher from there.
Yeah, the easiest thing to do, the easiest thing to do is to pull back a little further. That would be the easiest thing to do. Charging up that daily chart. It doesn't have to, but that would be the easiest thing to do is to pull back, 30, 40 more points, on the S&P, maybe another 200 or so on the NASDAQ, get it up into the 50s and 60s. And then the weekly charts are getting up there too. You can see them, they're in the 40s, get into the 50s. So you're going to get a weekly swing that's going to start in September.
A high and tight is extremely bullish. It's a very, very bullish. Very bullish signal. But it does take the longest amount of time to recharge.
To unfold.
Like what Dave was saying, the quickest way to recharge this chart and get it ready is to just go back in the opposite direction, because that will typically get your snapback and that what we call the slingshot move.
Slingshot. Yeah, putting in that higher low. Right. So Dave, we kind of could say we're at a higher low right now. If this is it, it's just a very close to the higher low, which is high and tight. Again, bullish. Jungle Cat had a question on the Russell. I'm not saying the rotation is completely coming out of the Russell. The rotation went in, all flooded back in on Friday because the Fed's going to cut rates. So there's your front running of the Russell, right? So, the Russell, okay, bam, it's gotten, everybody piled into the Russell on Friday. More than I thought, though. I mean, it did 3 standard deviations for the day, which is pretty big. And so they piled back in. And remember, they piled back in a few weeks back, and then it sold off all the way back down. And so all I'm saying is that after NVIDIA, if NVIDIA comes out and is really good, and it looks like the party is going to continue with semiconductors and tech and all of that, then I think you're going to see some, the rut calm down some and probably kind of go nowhere, especially because it's exhausted. The daily energy is down in probably about the 30, maybe less now. And so it's going to be in its own position where it's going to have to maybe go high and tight and go sideways for a little while and that stuff. And its weekly is losing a lot of charge too. And so what you're going to have is an S&P, and the Dow's like this as well. The Dow's like the rut. What you're going to have is an S&P and a NASDAQ that's got a much higher charged weekly chart and a much higher charge daily chart, and they're going to take over and go running again, and the RUT and the DIA aren't, or the Dow aren't going to be able to follow because the energy's not there. See? And so that's your biggest thing right now. See, the NASDAQ has a little bit more to go than I think the SPX. See, it's at 41 on the daily. I think it needs to go. I think the NASDAQ should sell off another couple hundred points. Doesn't have to, but it's gonna have to walk sideways then into next week before it's really ready to go. Doc's right. I think if it tries to break out here, it'll get pulled back down. But you can see its energy weekly is at 40. Right. And I think a pullback would charge it back up some, up into maybe that 50, where you kind of see that last kind of high level there on it. So, but if you look at the Russell's exhausted. So it's not so much the rotation as much as it is just the tiredness in the charts and who's going to kind of take over leading for the shorter term. And if there's anything that's going to drive things up to new highs in ahead of the Fed, it's going to be tech. And it's going to be, the S&P is going to go along with that.
So I'm going to just play devil's advocate for a second here, just in case, because I find this to be pretty useful. Just in case we're wrong, and if we don't end up making new highs for this, this is what it would look like. So we take maybe an NVIDIA, and we start heading lower from that. So NVIDIA, let's say they miss, right? So the market sells off, we go down to 19,000. The dip buyers come along, and then they run this thing up, but unfortunately they're not able to run it up past 20,000. They print a lower high, and then they run out of gas. They abandon their positions, and then this is what it looks like. This is called a reversal. That's a change in polarity. It's now, instead of higher highs and higher lows, it's lower highs and lower lows. This just looks like a pullback on the weekly chart. So now what has to happen is this has to transition over to this. This has to propagate. So we'll get some type of move down from there. We'll get another bounce, and this one will be a weekly bounce.
That would be ugly.
And then this is where we have a transition into a lower high, lower low on the weekly chart. Now we're starting to bleed red. Now the monthly chart still has to do the same thing. This is why it takes literally months for this to transition, unless there's, an exogenous event like a 9/11 event or something like that.
Well, and a good point for you on this too is you can make that case looking at that weekly chart at 40 for an energy that this bounce up, was just that to a lower high. And then we roll over from there and we use that rest of that 40 energy all the way down to take it down. You could say that, right? Price will tell us. I favor the scenario running into the Fed just because I think all the big boys know this, right? And so they're going to do everything they can to get all the retailers on board and everybody and their brother so that they can just do a rug pull on them after the Fed starts cutting rates. And I say that just because that is how things have gone almost every time this has happened in the past. Markets rally into the Fed, and then from there you get a bear market. It's like, 20, 30, 40% sell-offs in the coming year after the Fed starts cutting rates. And that's because you typically are going into a recession.
Right. So let us, guys, while you're still here, let us know if there's any other questions, anything else that we can answer for you guys. We'll be here for another couple of minutes or so. So again, the big risk events for this week, we have NVIDIA earnings on Wednesday afternoon after the market closed. That's actually a big day. There's a bunch of stuff going on that day. There's a bunch of other earnings coming out at the same time, but that's the big dog. That's the big market moving one. Right. And then from there, we're gonna react to that on Thursday, and then we have the PCE. But as Dave talked about earlier, I think the importance of those, I think the market's got fatigue on inflation numbers. Yeah. I don't think it necessarily cares that much. We have cared an overabundance of care over the last 2 years. Right?
Yeah, the only way the market's going to really care on that PCE number is if it comes in way above expectations. And the reason the market's going to care is not because that's going to stop the Fed from making a cut. It may change, or the market may look at it like, oh, this changes the pace of cuts, or it's less cuts than we are predicting. Like, or we thought we might get a 50 and now we're getting a 25. I don't think they're thinking that. I think they're getting a 25. But I think the market's pricing at 100 basis points of cuts over the next I don't know, was it 8 months or something like that? And so if PCI comes in really high, right, then maybe that changes that trajectory to where markets react to it, right? So that's about the only scenario where I could see it being, really market moving. If it comes in under, you probably get a little bit of a bounce for the day, and then, it kind of drifts for the rest of the day since it's, everybody's gone for the most part. So.
Okay. Any final questions? Anybody else? I'm going to show you guys.
Gaps. You and the gaps. I'm going to let you fight that battle.
Yeah. It's the market's got positive drift, so we're not going to, as long as they keep printing money, there are going to be gaps that we leave behind to the downside. So there's a lot of gaps that have never been filled. And honestly, if we fill those gaps, then probably we've got bigger issues to worry about.
Right.
So I guess we must be arguing over definitions. When I say a downside gap, I'm meaning something that's below the current price. So that's a downside gap to me.
Yeah, and you could look at there's the big gap in the charts, for just from recent, right, is right around 5,500. So that's why you said we could come down to 5,500. That would be a level to come and hit if we were going to do that. We're going to really sell off.
Down gaps. Okay. All right. No, you and I then are agreeing, because an upside gap is a gap to the downside. Right. Okay. Well, guys.
Yep, we got you. Got you, Head. Thanks, man.
Good deal. Okay. So thanks, everybody. Have a great Monday. I don't think we are going to be here next week. We got Labor Day.
We won't be here on Monday. We'll game time call, see if we can be on Tuesday or something. We'll send, for those of you that are on our email list, you'll get a notification if we're going to do something.
Yeah, I'm not going to be around on Tuesday afternoon. Okay. So we'll probably
bag it for next week then, guys. Enjoy the free day of time burn on your positions, and have a nice, relaxing long weekend.
Okay. You guys take care. Adios. See you around. Thanks for joining us.